Hello, and welcome to another geopolitical analysis. Thanks so much for subscribing. Please like and share the video, as today we're going to explore all the cascading events since lockdowns and the Ukrainian war that exacerbated some of the upcoming crises. Now, it's been 3 months since the invasion of Ukraine, and like we mentioned in our video, war is coming last year. It was inevitable and imminent due to the increase of troops and arsenal in the borders. Now, of course, other than that, we're seeing that the events in the energy markets, the imminent food shortages, and supply chain, which is broken, has been all mentioned again in the video COVID-19 economy. We are experiencing now those ramifications due to the increased lockdowns that we had for such a long time. Now, let's understand what's going on in terms of the energy and the oil prices. The rise in oil prices stems from the millions of barrels missing from the Libyan crisis, which also has one of the largest reserves in Africa. Of course, the Kazakhstan production line has decreased for some technical reasons as well. And if you add the contribution of the Houthis attacking Aramco in Saudi Arabia, plus the Russian sanctions, there you have it. It's just one factor with the other determining the imbalanced supply and demand model. Now, the overzealous green energy plan that in Europe has really taken flight from Franz Timmermans and his team of European bureaucrats has not helped to break off from the dependency of Russia. That is why we've seen the influx of LNG and American oil that accounts to 180 million barrels. Now, of course, that's not enough. That will only be enough for the 6 months. And after that, we're going to see that Europe is heavily going into certain regulations in order to curb the demand for electricity. We're seeing in Spain right now, they're talking about using air condition less. We're seeing in South Europe, a lot of countries are, the government are asking from the people to not use the AC that much. Where are we headed? This stems from the political parties that have ruined the landscape. Of course, the war was inevitable, but looking at the North American supplies, we got a Keystone pipeline that we're not using that will solve this problem of the oil prices here in North America. And of course, the ridiculous Biden administration seeking help from Venezuela and opening channels to Iran is just another desperate moment for the American politics. We call Putin a dictator, an autocrat, that he might be for some, but isn't Venezuela and Iran worse than Putin and Russia? How is it after all these American sanctions we go back to ask to help? Now, that is not the only funny situation for the Biden administration, but there's been talks about secret meetings with Saudi Arabia to pursue them in increasing the OPEC production lines. Now, OPEC and OPEC Plus, that involves also Russia, Venezuela, and Angola, I believe, is not going to increase its production. Why? Because they're loving right now the situation. They will have a steady supply and they will not care about opening more barrels to the world because they will lose profits. COVID destroyed their profits. We saw the price of oil going down to minus 30, minus 40 USD, something that was never would have been guessed by anybody in the energy markets. But we saw that happen. And of course, now we're seeing that the summertime is a bit lighter for the countries in the West in terms of requiring heat. But this coming winter is going to be catastrophic and is going to mark a lot of crises that we will end up seeing in Europe especially. Now, moving on to the food crisis, a main indicator of the higher food prices was the increase of 30% in fertilizers, which includes ammonia, it includes nitrates, it includes nitrogen, all which are and more, which are responsible for that. And the fertilizer price index jumped from last year 128%. Now, we have to be reminded that natural gas is a vital component for fertilizers. You cut down that, and what happens to the price of fertilizers? It goes up, just like that. It's just a natural model that happens. So, if we look at the political landscape, Biden administration, and there's no hate to the Democrats in the U.S., but we're finding that there's one mistake after the other. Biden administration is so desperate, they're discussing about Nopec. Now, Nopec is a regulation that has been talked for more than 100 years ago, I believe, by the Rockefellers, who were trying to sever the monopoly of the OPEC cartel. Now, what that includes is, of course, the suing of foreign companies that do business outside of the sphere of the American monopoly, because that's what it is, essentially breaking one monopoly and creating another. But what that will eventually lead to is a de-dollarization, the further de-dollarization, the exodus of the US dollar as a global currency. Why? Because we're already seeing the Eastern countries that are the producers creating their own payment systems outside of SWIFT. We all saw what happened with Russia being exited from the SWIFT system, and of course Russia trying to peg its currency to gold, its goods and services, and exiting the whole dollar system. Now, the euro is pegged to the dollar. Other currencies that we know in the West are pegged to the dollar. The bond market has been destroyed over the last years, showing that there is less and less demand for the purchase of bonds. Now, of course, the central banks are the ones who are the main culprit here. The central banks have been printing trillions and trillions of dollars, thinking that this will stimulate the economy. Well, since 2008, and of course the crash of the 70s, Bert Doman, his research group, had predicted these things, and we're seeing now that it's coming to fruition even faster than we thought. Many are talking about a recession. Economists and critics are discussing about an imminent recession in 2023. But we're seeing that no government is trying to solve the issue, cut down the problem from its root. Now, we must remember that oil produces, the need for oil is great because there are products that in order to be produced require oil. Many byproducts of oil, petrochemicals are needed, and this is very vital for our economy. Hydrocarbons are not going anywhere, and it's been a mistake that we've rushed outside of hydrocarbons and have put so many sanctions to these large exporters. The West is experiencing backfiring of the Russian sanctions and the other sanctions of the world, as the East is strengthening its relationship, strengthening its economic ties with countries such as India, Pakistan, China, which have increased Russian imports close to 40%. Now, in the West here, we're consumers. There's no surprise. China is the production line of the world. What's happening between China and the US is also another scary thing, because China has bought the debt of the US. So we see these two economies are tethered, but are heading more and more into huge conflict. Food industries have declared that there's going to be a 10% jump in the coming months in food products. The agricultural sector is broken, and of course automation is taking over, but we are not seeing these vital problems being solved or a solution package for the things that we mentioned. The war in Ukraine has also increased the geopolitical insurances, which of course drive up the cost and result into imminent contraction of the world economy. But let's look at the chasm of the East and the West for a minute. Of course, we are experiencing now the Russian sanctions backfiring here in the West. And of course, the demand of Russia to be paid in rubles is a further de-dollarization of the global currency. But we also see BRICS supporting that. We also see that one of the largest exporters that the West depends on, including wheat, including coffee, including grains, lumber, and other precious metals, are supporting Russia. So in this case, we're finding that the West is being isolated by these main exporters, these main producers. And this is not good in terms of the prices, and this is not good for the middle class. The central banks, like we discussed, are the culprits. They need to cut down in the liquidation. They need to stop thinking about just increasing the rates, because you cannot taper a Ponzi scheme. Like Max Kaiser often says, we have to cut down the supply of money in the markets. This is not the real economy we're experiencing. The money that is rushing in is not going to the right places. We're seeing that there's been a lot of millionaires who are hoarding these funds, and we see these companies are not actually producing goods and services enough. There's a main problem here, and the problem is that we are not autonomous. In order to be autonomous, we must look at the local resources in our ground. We must look at supporting the local economy, because globalization is failing. It is failing fast. I really worry about